Live and recording.
This is Market Week Live for March 6, 2026. Information and support for traders and investors. Welcome, everybody. We've got a lot of people pouring into the room here. Of course, welcome to everybody who's out there on YouTube watching us or watching a video of this show, which will be posted. We usually post that in the later in the afternoon. So welcome to you all. This has been quite a week for the markets and for the world. So we're going to do our best to uh, unravel it all for you the best we can as we take deep looks into the requests that you give us and into our look at the stock market later on in the show. What we're going to start out with is our express round for level 1 and 4 members. You ask your questions in the Q&A. The floor is yours about any topics about askSlim services, trade planning, chart analysis, trading issues, any of those. We'll be glad to help you. That is, what our goal is to make you the best trader or investor you can be, because your success is our success. Matt is going to bring you the DayTrader service preview. And this is amazing. You're going to get 2 weeks of our DayTrader service, which there's nothing else like this out there. Free preview, actually. No credit card necessary, no automatic renewal. It's just you in there because we want you to get a good sense for what we're doing, because we think you will love it and benefit from it. And then I'm going to bring you my analysis on the stock market and the super tight range that we have had for the opening of this year, looking at what that means. We're also going to look at HYG, which are the high yield bonds. And there's an important message there that you don't want to miss. Take a look at the MCM and you'll see our proprietary studies and the analytical processes that we go through. If you're new, get acquainted, go to the top of the website, sign up for SIR Lite. That's our snapshot that Matt does every single day on the S&P 500. Just go to the free stuff and sign up there. And check out Slim AI on the bottom of all of the pages. On the front page, is the greeter, essentially. So if you're not a member, that will help you with information about the everything that we do here at askSlim. And general questions about the markets trading. And if you're a member, you can see it on all pages. And it gives you much more information and much more help. You can even upload a chart and it'll help you analyze it. On YouTube, subscribe to this channel, click the notification bell, and do like this video. Give it a thumbs up. On X, follow me at askSlim. And any questions you might have, write to Matt at askSlim.com. Contact info, well, if you're a member or you want to know something about the membership issues, or if there's a problem on the website, write to team at askSlim.com. And again, any questions on our content, education, information, first-time specials, or upgrades, Matt can help you with that. Today's hosts, we have all four of our amazing team here. Go to askSlim.com, top of the website about askSlim, meet the team, and you'll see some interviews that we did with each other, and you'll learn a lot about our history. We've been around in this markets a long time. If you take Matt and Arby and Katie and add up all of the years they've been together and trading in the markets, well, I equal more than that. 52 years in May that I've been a trader, and I'm one of the real dinosaurs out there, but I assure you, I can still help you. So make sure that you go and find out about what our histories have been by watching those videos. You'll love them. All right, this is the questions and comments section. I see that our level 1 to 4 members who are in on this Zoom, in the Zoom room, are starting to put up questions right over there. And I can see that for our team who does the indexes, I'm sorry, the ETFs and the equities, we have Coin and Microsoft, UNH, US Air, and TNX. So TNX is the yield. So I'm going to take a look at that also. TNX. Okay, and I'm going to do gold and Bitcoin ETH. light crude, natural gas. Those are the ones I'll take. I'll take first. So I'm going to do those first, and then we'll take a look at the ETFs and the stocks that the team is going to bring. So you got about another 3 or 4 minutes. You can put requests in there, and then we're going to close that up. All right, so let's take a look at the charts. We're going to start out with gold. Now, if you look at gold, the weekly on the left and the daily on the right, you actually have some important messages that you see here. So gold is giving us messages of continued strength. Now, there is a little bit of conflict in that. On the bottom here, you could see the cycle brackets. Remember, cycle brackets are not cycles. They are just simply guides that show us where the rhythms are in the market. In the case of this chart on the left, which is the weekly, I'll blow that up for you. You can see that this is the silver cycle right over there. And this right over here is the bracket for gold. So silver has a different rhythm in its markets than the gold does, as you can see. And still, this is where they came down together and completed this correction in a very bullish condition. So where are we now? Well, we had a massive upside spike and it gave way to a correction. So this was clearly a blow-off looking move right over there. And that really puts this 5,600-ish level as an important obstacle or resistance level. Here, where the market continued to rally, you can see, well, it gave you a reversal pattern right over here. And I'm telling you that there's a reason I'm not trusting it right now, and I'll show you that in the daily chart. Because the daily chart is looking more bullish. Again, also, this is our reversal scout. This is a level 4 indicator. So if you become a level 4 member, you'll be able to put this up on the Thinkorswim platform. And this will then give you an idea of momentum conditions that exist in the charts that you put it on. I like to keep this on a weekly chart. And you can see in here the momentum is still strong in the gold market. Now, when I put these up as a side by side, I want you to see the pattern here in the gold market, and the cyclical rhythms that are in here are amazing. As you could see, the energies coming in the market, and this is the slim ribbon showing you the strength right over there, and the correction perfectly, the rise and the correction perfectly, the rise, and look at this, the correction perfectly. And you can see this is a positive cycle, higher peak, higher trough, positive cycle, higher peak, higher trough. Each one of those signals a higher high coming. And you have the same thing right over here now. So with the positive momentum on the weekly, with this moving down into the support buy zone, it says to me that while you might get one more little move here to the downside, the timing is never perfect. This actually could have been the bottom at 5,000, and then we're expecting an upside move. So again, this resistance right over here, that peak 54.45, that's the peak right over here, 54.45, let's say, or 40. That looks like a good place to target over here at the minimum for gold to come up right in this period. Now, if it follows the positive momentum conditions, now look at the slim ribbon PO on the bottom. This is just an amazing indicator. Not only when it's green does it follow the slim ribbon, but when you see the arrows there, it tells you about the renewal or the resumption of momentum in that direction. It was just spot on. And you're getting another one right over here. So this really looks like it's starting to get into where it's making that trough, and the timing is right for that to happen. Now, if it was really to get legs and the inflationary concerns be stronger than they are right now, which they're quite strong because of the oil price, this could get up into that area right over there. So will it stop at the resistance, around 54 and change, or will it go to a new high right over there? Well, this cycle here says there's a good possibility it goes to a new high. So overall, extremely bullish conditions when you look at that. The only caveat is this reversal right over here, but I've got a reason to believe that's not going to, hold the market for long. So this overall is a bullish condition that I see in there. So that is a look at the gold market. Let's switch now and look at light crude and natural gas. Here is the light crude market. And I did a lot of teaching on that one, so I'm going to go a little faster here. Now, the light crude market, well, this was the perfect spot for light crude to bottom. I mean, look at the magnificent cyclical rhythms that are in there. I mean, it doesn't get any cleaner than this. You have the intermediate, the minor, a cycle right there, and the dominant. And you can see where they all three came down together here. That was a big break. The same thing right over here, the same thing right over here. And when they're all rising together, you get the upside moves that you see in each of these time frames right over there. But look what oil did. I mean, all the way up here to $90. It got up here to $90. Crazy. So these supports here are rising as the price goes up. So I'll have to update that again for our members. I sent out a update to them this morning, and now even the support zones are still rising. Now, one thing I think is important to say, and that is this is rising because of fear about oil shortages and the Strait of Hormuz being closed by Iran. That's a 21-mile wide water body that is between Iran and Oman, and that ships are afraid to travel through there right now because they're afraid they're going to get bombed. So the oil price is going crazy, but were that to calm itself, and it was clear that ships could get through again, no matter how we got to that point, oil is going to reverse very sharply. We just don't know from what level. Here's a resistance right over there at an old high at 95. Well, it's at 90 based on the fact that it came in the last week from 70. Why can't it go to 95? So that's a strong possibility that it continues to go up. Remember, this is a strong period right in here. And then when you look at the minor cycle right there, these two lines, these two cycle lines right there, in the middle of them is the ideal period for a correction. You can see the pullback here in that ideal period, the pullback here, right over there. Here's another one here. So when that would happen, then you'd get a minor cycle in there that would have a pullback to some level of support, and that comes out into May. So you really got to figure sometime between now and May, there's going to be some real sharp pullback here in the oil market. Here is the daily chart right there, and I've got to get the daily analysis up there, and look at the cycle rhythms that you see in here. And of course, this next fib extension right over there is at 93.38 that we have right over there, and a resistance from that weekly chart at around 95 and change. So that's the area that I would expect it to go to. Now, this cycle here comes back into April, and then the one following that comes back into May. So you could get some pullback, some rally, some further pullback into May, and that would align with this light crude. But, anywhere in this rally that you said, this is crazy, this is going too far, this war is going to end like it ends all the time, well, you've gotten absolutely slammed on that. So you just don't want to get in front of these moving trains, especially in commodities, because commodities can just absolutely keep going. Now, one more thing I want to tell you, this makes a lot of sense to me, because if you look right down over here, you can see our option bias indicator, OBI. This was green all the way through here, saying keep your option positions on the long side. So no lying right over there. Here's where it went a little bit overbought, and you see these orange dots right there. That's telling you about the extreme market condition. Those orange dots only show up when something is very extreme. So at this point, you really have your radar on for some kind of a reversal, but that's not yet. So now we'll look at natural gas /NG. This isn't really being affected very much. And I'm going to put up the natural gas right over here. Now, this is the continuous contract, and this is skewed because of the roll in the large contango. So for our members now, what we're showing is NGM26, which is the June contract. And you can see that it is not skewed as much right over there when you're looking at the weekly chart. And you can see that this is where that low trough was, and here and here and here. So this is now showing it very much in line. And the daily chart, which I'll have to switch back to the front month to see that analysis, we'll show you that where this low was here in January. Let's take a look right over here as I switch back to the /NG on the daily, which now is the analysis of the front month. And you can see right over here, that's that January low right over there. And here is a bullishly configured cycle. So what that then points to is that natural gas will very likely begin to move up again. And you'd see a move probably at very least into this resistance zone following this rising cycle right over here. So you can see how we use the rhythms, the energetics, the shapes, support resistance, the multiple time frame analysis, and all of the tools that we use, putting all that together. You can learn that from us if you're a member, because our team just an amazing job on a Discord channel teaching this all of the time. And I don't know if there's a better way than to learn from Arby and Katie and Matt when they do stuff on there. And of course, I bring this type of lessons in the markets all the time in these shows and things that I post up on social media. So we want to teach you this because we want you to be successful and keep using this type of information. I don't know of a better way to really get a good feel for the market. So that's natural gas turning up at the right point and maybe getting up here to 3.7, 370 to about 395 right there. That's my analysis on natural gas. The last two I'm going to bring are the cryptocurrencies /BTC. And here is the weekly. Let's bring this right over here. So if you look at the rhythms that are in here, you can probably get a good idea as to why I have this pointing down, this arrow right over here. So just look at this point right over here where you see the decline. And when it broke under this level, that gave you a negatively configured cycle. When it moved down from this early peak, that was called a left-hand translation. When you get a left-hand translation and a peak and a break below the support right there of the previous cycle low, the odds are very high it will continue down into the timing for the next trough. This was a bullish cycle, as you can see, called for a higher high. You actually got pretty much a double top right over there. And again, once it broke this support, continued down right through this time frame. If you look where we are right now, this break is in the middle of this cycle. It says to me where the energetics to hold up, the wave action, and if you go out to the ocean, stand on the shore and look at the waves coming in and look at the waves coming out, you will see the regularity of those energetics. They keep coming and they keep coming, and you can pretty much time them by the second because they're going to keep that way. That's what these energetics are. It's money flowing out of Bitcoin right now. And this upside move is just simply a correction right over there in a very negative period. So if you look at this right over here, the reversal scout, very weak. Here's where the reversal scout gave you the rally and then turned down again, breaks below those lows. And yes, we're in a downside move that takes you into the April-May period. So I have this projected coming down to under 50,000 right over there to that next support. Granted, this is a support that it created right around 60,000, 59,000, that it might come down and hold over there. I'm not sure, but that's 9,000 lower than it is right now, and certainly going to cause pain to those Bitcoin holders that believe it's going to $250,000 or some other pie in the sky number. So this is a very negative look when you look at that. Now, if I look at the daily chart right over here, remember I told you that the decline is into April. So here's where you could see these energetics in here. When you see they're dotted blue, you know that we did some shifting around in here. So you see the harmonics in here on 3-4 were slightly shortened, and that's why I've left them dotted. So our members know that I've made an adjustment in here. Full accountability when I do that. So this cycle right over here, that bottoms April 26th, if it were to bottom ideally. So I have this note here for our members. Weekly and the daily have synced troughs at the end of April. That's this next cycle. So what it says to me is that when this rising phase ends right over here, that's when you begin that next move down to as low as 49,000 is what I see there on the weekly. So that's how I'm bringing in the multiple time frames. Now, talk about a fantastic indicator. Take a look at the slim ribbon PO over here. Slim ribbon red negative. Reversal scout in here red negative. Slim ribbon PO giving you continued warnings of continued downside momentum. Very clear. Look what it's doing right over here. It's telling you that it cannot get anything significant going on the upside. So the reversal scout turned up in quite a shallow way, but these messages here are conflicting, and it's saying you've got to be cautious about rallies in here in Bitcoin. Now I'm pointing right over here for get to almost 80,000 on a bounce. That could happen, but were it to happen, I think it would be a screaming sell. In fact, I'm hoping for that to happen because I want to get a short side opportunity in there. So this is 74.8. This is 79,000 right over there. That's that resistance. Sell zones, as you can see, I have it marked in there. Sell zone because the sum of the evidence says this is likely to fail. And there are sink troughs over here in April that you see both on the weekly and the daily. This is how we use this stuff. That's how RV gets 74% positive on directional decisions. And that's posted up on our trade ideas page. RV is just phenomenal at that and using this work. So again, you can become a level 3 member and get those trade ideas also from RV. So that is a look at Bitcoin. I'm going to switch to Ethereum. I'm taking a long time on here. So I hope that the lessons have been helpful. And I'm just going to look at Ethereum, and then I'm going to turn this over to the team. And here is Ether. Now, when you look at Ether, I've got the Bitcoin cycle energies on the bottom showing you it's just slightly off from what the Ether is. Maybe the Ether pattern is just slightly larger or slightly shifted. Here was the target zone right over here. That's based on this move right there. And it got down into it. Again, all of the analysis I just gave you on Bitcoin is the same in here. These downside targets are a test of this low over here, which is at 1780 with a potential move over here to under 1400, which would be in that April-May timeframe. The same thing that we have over here, the same messaging. Next cycle comes down into April, right over here. If I just highlight this, it'll tell you the date, which is April 24th, and that this rally right over here is the same issue, just getting up to the 23%. All of these negative warnings right over here telling you that there is just not much upside here available in Ethereum because it just can't get the traction that it needs to get any real kind of a rally. I'd love to see it get to that resistance around 2,400 because that's where I want to whale on it if I have a target of somewhere down well under the last low under 1,600 or 1,700. So that's a look at Ethereum. It's a look at how we set up these the analysis and a look at how you can use this information to figure targets, to visualize where something can move, to visualize the timing, to do everything that you need to maximize a trade. One thing that's really important about maximizing trades, and I've had a lot of people comment to me about how did you visualize something getting to that level? And even when I was trading on the floor, people would say to me, you said it was going to go here. How did that happen? But that's really using this type of targeting. And the team talks about this all the time. The value is that you can hold on to your trades longer until the market tells you you're wrong and you have to get out or you reach some maximum loss. This is, about visualizing where something can go. So if you have the position in that direction, then you can maximize it. You need to get your winners a lot bigger than your losers, and you need to get your winners coming more often than your losers. Hence, RV's 74% positive directional decisions. That's how you put that all together. That's actually my lecture for the day. And I hope that you found all of that analysis extremely valuable. And I'm going to turn this over to the team.
Okay, I'm going to start. I have a couple of requests that came in advance. So let me know when you can see Corning. Good?
Yep.
All right,
Good to
perfect.
go.
All right, so this is Corning, and I believe the request came in last week before we had this massive bearish engulfing candlestick that has formed this week. So you can see what happened. We had from back here in 2023, positively configured cycle. This one was very flat with a right-hand translation, and then we had this explosive move upward. This week, bearish engulfing, it's gotten through the very top of the support zone already here. The reversal scout has not had a chance to curl over yet, so it's still showing positive momentum. And we do have a weekly cycle timing window coming up. It starts in mid-June. Let's go over to the daily chart and see what's happening there. I'll zoom in. So we had all of these configured cycles, positively configured cycles, good structure, shallow retracements. And then in this cycle, something changed. We did take out the prior cycle peak, moved up towards that 78.6% extension. And then we have had this whole move given back almost. Here's the cycle of support at 124.80. We are just a couple dollars away from that. The reversal scout has turned negative, and we do have a cycle timing window that's coming out in mid-March, 316 to 324. So projecting to retest or even break this prior cycle low support, and then perhaps get a bounce up into a resistance zone. Right now, this resistance zone is declining, but this would be 140.67 on the bottom and 148.85 on the top. So if it can get back up into that zone, it would be a sell zone. For moves down into this weekly cycle timing window coming out in June, expect to have some weaker cycles coming up. The next symbol that I have is GSK. First, we're going to start over here on the monthly chart. That's what was requested. This is GlaxoSmithKline in the healthcare drug manufacturer category. And let me just zoom in here. We have cycles that are 27 bars in length, and we're in approximately the ideal peaking phase of this cycle. This was looking very strong. Just tried to break through and hold above that prior cycle low support back here from 2007. Was not able to. We're getting a pullback now, but the reversal scout is still positive. And so I've got higher projections or perhaps flat if it can try to get back up here again, because there's nothing inherently that is negative yet about this chart. We do have a timing window that comes in the first half of 2027. So we'll have to see what happens. This still has a bullish look despite this candle that is showing a pullback from there. Let's go over to the weekly chart and see if we can get some more information. So here we have cycles that are 28 bars in length. We had a nice move up, got to the 78.6% extension, and now you can see what's happening. It's having a strong pullback this week. So this is also still showing positive momentum, hasn't had a chance to switch yet. And we're just in the middle of the support zone. So perhaps we can retry for this area up here, maybe higher. But this also is a chart that I would want to see further information. So I did, even though it wasn't requested, I did also do a little bit of analysis over on the daily chart. We can see what's happening just a little bit. I put in some cycle brackets. These are 32 bars in length, and you can see that that pullback is a result of this retracement into the daily cycle timing window. We've had the reversal scout turn negative, and just the past couple of days, we've had the slim ribbon neutralize. Now, if we want to, we can go and see if this is still a normal retracement. And it is. If we were to break below $53, which is the 61.8% fib retracement level, then I think that this would kind of neutralize all of the bullishness that we are seeing. But I expect for if this if this can hold, to make a retest perhaps of this prior cycle peak up here. If not, take it out. We'll have to see what happens, but I'm just waiting to see how this retracement plays out for the moment. Then the next one was BDX, Becton Dickinson. Also requested was monthly and weekly. So we are early in the rising phase. We've had the switch to positive momentum here on the monthly chart. We got to the top of the resistance zone here and having a slight pullback this week, but everything still looks quite bullish. This was a negatively configured cycle. So that means that the probability suggests not being able to take out this prior cycle high. And you can see that there is a lot of resistance there. We've approached that level 1, 2, 3 times. So we'll have to see if this can get going. But we have a 78.6% fib up here at close to 205. That would be our first target, this area between the top of the resistance zone and that area. Over on the weekly chart, you can see here was that monthly and weekly synced cycle low. We made it up to this intermediate 200% extension off of that cycle, and now approaching a weekly cycle timing window that runs from 511 through 619. So we got down to the top of the support zone this week and getting a little bit of a bounce. Expect to move lower into that time frame. So that takes us out into late May, mid-June, which is right about here on the monthly chart. And so higher prices wouldn't be expected to be attempted until after that. Over on the daily chart, same kind of thing. We are approaching this daily cycle timing window in mid to late March. And so far, the retracement is trying to hold up over this bottom of the support zone at the 61.8% fib. If it is able to hold below that, then we would expect to create some sell zones in here and for lower highs and lower lows going out into this time period in May. So those are my three charts. I'm going to turn it over to RV.
All right, awesome, Katie. Great job, guys. Let's go ahead and pop over to some of your charts that I have here. First one is Microsoft, so let me share the screen. All right, you should see Microsoft. So what we're looking at here on the intermediate term is really very interesting. Okay, we're seeing the S&Ps get smoked. We're seeing the NQ get hit. We're seeing the RTY get hit. You're seeing the EMD get hit. And software names that have been crushed are getting bid. That's what happens when you're in a trading range. You see weak stuff get bought. You see strong stuff get sold, right? GLW is getting sold. LITE is getting sold. All of those large leaders that everyone has been sitting in are starting to get sold. So that's the nature of a trading range, right? We've been in a trend for 5+ years. Everyone has seen, most people have only seen trends. Reality is trading, we have ranges and we have trends. So we gotta learn. This is what I was saying earlier, earlier on this week. We gotta learn how to trade trading ranges effectively because trading, markets actually don't always trend. Markets far more often trade in ranges. So we gotta really learn how to trade trading ranges. And one of those ways is to play names like this off of lows. Now, this one's obviously a little bit weaker, but still you're seeing a move down into this low. Sharp sell off, obviously overall very weak, but a trough that is due shortly. And short term, I know this isn't looking like much, but in other names, it's far, far more on the upside that we've seen in this area. But a trough that was due, you can see this has not put in any kind of, you know, any kind of lower low. Rather, it's just forming these series of higher lows on its way up. And we have, a zone that is slightly higher. So again, not anything huge, but I just want to show you names that have moved, right? This one, CRWD, CrowdStrike, big move up. APP, big move up. All of these names have had significant bounces off of the bottom. So like this is where you need to be if you are looking at trying to play a range. So this is, I think, a really, key area to be looking at. Jump over to COIN. COIN had a move up. There's actually a low that is due here in COIN, so it's trying to move up a little bit to the upside. And if we draw in our areas here, you can see them right there. Let me get my cursor here. 195 to about 212, and then up to 229 is the 61.8. So you can keep your eyes on that. Short term, a move up. You can see our areas down 185 to about 167. So you want to see it kind of hold up sideways here, form that higher low into that trough, okay? And then look for another move back to the upside after that. So holding in okay for now, but needs to stay that way. If we jump over to the next one, the UNH. UNH has really done really not a whole lot of anything, holding up near lows, a low that is not due here for a few months. So looking for this to be another lower high flag move down to this old trough. That looks like the highest odds at this stage. Short term, 3.6 to 317 is when that low is due. So, but look at this, bearish earnings move on the downside and just holding it, right? So this is not anything to really write home about right now. Jump over to USAR, also another name here. Let's just pop over to the daily bar. Move down, sold off sharply, and then a very weak rising phase. It is already looking like it is getting ready to head lower. And you can see our areas down here is really what we are looking for into that trough, which is due somewhere around the end of March. Last one I want to look at is SMH. SMH is very interesting. You know, you got to see the names that are actually moving up right now. And I want to show you a few of those. But first, you can see that there is a low that is due here in this name. So we are still watching for that short term. We have a low that is due, you know, right around now. But you want to look at some of these names, right? AVGO starting to, you know, move a little bit to the upside. You can look at MRVL, strong move on earnings off of its both weekly and daily trough. So this is very important action to be watching for, especially when we're seeing selling in the broad market. And that's what I have to share here, Slim.
All right, great work. Great work, everybody. All right, I am back, and we are going to move on. So again, if somebody wants to join in and ask questions, please become a level 4 1 to 4 member, and you will be sent the Zoom link and invited in to participate. And we hope that what we brought was value to everybody who watched this great segment. All right, this is Matt's review of askSlim services, and this one is just gonna blow your mind. Absolutely fantastic. We're giving it to you for free. Matt, take it.
All right, thanks, Slim. Great work, team. Share my screen, and you should see the homepage of askSlim here in a second. Okay. So at askSlim, for those of you that are not familiar, we offer several membership options with a focus on technical analysis services, trade planning tools, and education. I'm going to take you over to our memberships page. And you'll notice that we have 4 core, let's call it membership types, from level 1 to level 2, 3, and 4. And as you go from level 1 to 3 and 4, what happens essentially is that the coverage that you'll receive in terms of the analysis regarding markets, stocks, ETFs, futures, as well as additional access to our charts, our custom indicators, and trade planning tools all expands. So essentially with level 1, you're going to get a deep dive into the indexes and the Spider Select ETFs. And then as you move into level 2, that's going to broaden out to our focus list. You're going to get access to our charts hub, our investor hub, Future Speak, our trader library. And when you move into level 3, that's when you start getting into our real-time tools such as the MCM. And then we have cycle low timing trackers, RV's trade ideas, and you can see how that starts to expand as you move on in the membership levels. And it really then becomes all about the trade planning process and getting to experience our methodology in action. And with level 4, when you're all in, you get direct access to our charts. So the charts that you see us analysts put up on the screen when we do these live events are exactly the charts you're going to receive from us after we've completed our work. You can log on to the site, and we have a charts grid area where you can then import those charts live onto your own thinkorswim platform. So that's an overview of our 4 core memberships. And then we have our standalone premium day trader service, which Slim just mentioned. We have a phenomenal opportunity here for those of you who have not had a chance to take a look at our day trader service. There's a free preview, no credit card required. Essentially, just fill out this form. And then over the next few days, you will get your login information. And starting next Monday, you have access to our day trader service. So that service is going to give you direct access to the impulse monitor that Slim built. And then we have 2 live cockpits where we have a cockpit, and I'm going to show, I'm actually going to host after our regular event ends today. I'll spend about 10, maybe 15 minutes tops for those of you that want to hang around. And if you have any questions and you want to see some of this live, I will pull that up. Right now, I'm just going to give you the brief overview. I wanted you to know where you can go sign up. No strings attached. You're going to get 10 days or 10 market sessions, and you'll have access to then the impulse monitor, our live cockpits, our market replay system, and then there's a huge repository, a resource area of educational materials that we put together that you'll have access to as well. So it's a phenomenal opportunity, no strings attached. Take advantage of it. For those of you that are already day trader members, you're going to have the same access that you normally have. So there's nothing in addition that the free preview is going to bring to anyone else. You'll still have all the great access that you currently have today. So take advantage of it. Simply fill out this form. And then over the course of today through the weekend, you'll get your sign-in information, and then you'll be able to access it once you receive it. Sometimes it takes an hour or 2 for the system to update everything. But when we go live on Monday, when the markets go live, you'll have access to everything. And then during the course of next week, there'll probably be 2 days, maybe even 3, where I'll come on and I'll go live for 20 to 30 minutes and answer questions, talk about the markets, what's happened so far in the first portion of the markets, talk about the second half, and really dig into some of those tools so you can see the value that the service brings. So that's what I wanted to capture here in a few minutes. Stick around for when the regular show ends, and I will pull up some stuff live for us to review.
All
All
right.
right, Slim, back to you.
Great, Matt. I hope you get a lot of people come and then get a good feel for what this day trader free preview is. It's just going to be phenomenal. And hopefully there'll be a lot of people that see how much they can benefit from it. All right, we'll move on. All right, stock market analysis and projections. First, this important information. This tells you about our approach to analysis and about you using our analysis, or really anybody's analysis, and the importance of trade ownership. You must own your own trades to manage your own risk. And to see all of our terms, disclaimers, full legal, you can go to askSlim.com. So important for you to read this slide. All right, market brief. Well, stock indexes drop after holding towards the all-time highs, and that's despite cracks in AI and software, and now lately financials moving down very sharply. And the stock market has done an amazing job holding up near their all-time highs, certainly compared to other countries out there, foreign markets. The Iran war brought a huge surge in oil, and now it's up over 25% for the year as light crude gets over $89. I think it got over 90 a little while ago. And this is all about, of course, the potential for supply cutoffs in oil. And just a few minutes ago, I saw a news item came by that says that there's going to be no ceasefire. It's just simply going to be that the Iran has to have an unconditional surrender So, a lot of people might think this could, be settled over the weekend, but I think the odds of that are low, but, who really knows? Foreign markets for the week, based on all of this, drop sharply. You see Japan down 6% on the week. The European markets all down. If you look at the FEZ, which is the Stocks 50, that's the highest cap stocks in Europe. They're down 10% on the week, and South Korea crashed. At one point, it was down 20% on the week, finishing about 12% down on the week. And interest rates jump on inflation fears, and the 10-year yields spike from 3.96 up to 4.17. And U.S. stocks in an extremely tight range and a historical range. Actually, I look back at 75 years, and there are really not good comparisons when you look at how tight this range was, especially coming in at the beginning of the year, or where a tight range might exist in a bull market. And the closest comparisons really were mid-bull market corrective periods or at distribution tops. We don't really know which of those it is. The market's going to have to prove that to us. And it is slightly breaking to the downside of the range. And that's very much in line with our analysis of the market moving down into mid-March. And I'll show you that on the charts. For the week, S&P 500 down just under 2%. NASDAQ hardly down at all, like 0.5 or 0.6% right now here at noon on Friday. And the Russell and the Dow, they took the biggest hits. They were the strongest indexes and now the weakest. Both of them down about 3% on the week. So that's what happened this week. And we're going to take a look now at the markets. So I'm going to do it a little different this time because I've got a warning for you. And the warning is in the high yield area. These are, corporate bonds, things that, have higher yields, and they're very related to the stock market. And I'll show you that they're related. And then we'll take a deeper dive into the S&P 500, NASDAQ, and the Russell. And if I remember, somebody asked me about the VIX. So if I remember, I'll put that up. So let's take a look now as we switch over into the stock market. So I'm going to switch now into the first thing that we'll look at is the relationship between the stock market and high yield. So this is a very interesting chart to me. First of all, remember, this is cycle analysis. We look for repeating rhythms in the market. And this chart is just absolutely screaming of repeating rhythms. And you can see on the bottom, the energetics as shown by the cycle bracket right over there, and how those cycles resolved in here. And this is, of course, HYG. Now, what I really importantly want to show you are two things. How well the stock market and HYG, high yields, track each other. And also what happens when the HYG breaks down. That's bad news. It's bad news when it breaks down, and it's bad news now because it just broke down. So each of these yellow ovals are highlighting those areas. But first, let's look at the rhythm that you see in here and how that compares to this blue line, which is the stock market. And you can see they move together. Sometimes they'll be a little different where you could see the peaks were a little different right in this time frame right over here, but basically they move together. And when the stock market is in a period of decline of some significance, that's usually because there's some economic issue. And then, of course, corporations run into trouble. They have to pay a higher yield to borrow money, so HYG goes down. Now let's do this cycle analysis so that you can get the picture that I'm showing you right in here. And I'm just going to go all the way back over here to 2016 because I want you to see each of these breakdowns right over there. So here is where this HYG broke down right over here. And that brought this stock market decline right there. They moved down together. So it was a breakdown, came down into the cycle timing. Here's another one right here. I'm just going to keep making this bigger. This is where it broke down right under here. Now, it was pretty late in that cycle. You can see it had only a few weeks that it could fall, but look what happened in here. The stock market absolutely got crushed at the same time right over here. This was, of course, in 2020 and the pandemic. So the stock market cracked and HYG cracked with it. And you could see when it broke that important low, it was big trouble. Go back over to this one right over here. Well, before I do that, let me just show you. Here's where the Fed and the government stimulated right here, and that lifted HYG and the stock market together, as you could see right there. Here's where the post-pandemic withdrawal of stimulus came in QT, and they moved down together. And here you could see the stock market moving down along with it right here. So let's just come right over here and look at where we are right there. This is a good comparison because you can see this one only broke down with 1 week to go. So the stock market and the HYG market moved down together, and then here's where the reversal scout turned up, and they moved up together right in this rising phase. You can see that. And remained strong until you had this downside move together here in 2025, where the stock market had a correction, and that was on the tariff panic. And you can see they both move down together. So this is the caution signal. First of all, you could see the rhythm right in here, and that there is a trough due in HYG in May or June. You can see the breakdown right over here. If that's the case, the message strongly is that the stock market and high yields are going to move down together. You could see that the high yields topped right over here, the reversal scout turned over, and here's where the stock market turned down after being in quite a range right over there. So what does that mean to me when I look at this? It means to me that while there's probably a period where the stock market's going to rebound and some of these beaten up groups are going to bounce, this period right over here is a warning that the stock market could actually accelerate to the downside after some upside failure. So that's really important to look at when you look at HYG. Now, I'm going to look at the daily HYG right over here, and you'll be able to see, again, some fantastic rhythms here in the market. Let me just blow this up for you to see. And what does this point to? This points to the likelihood of a continued decline right over here in HYG for another week or so. And that's what I'm going to show you, I think, is going to happen in the stock market. And then a rebound. And then this cycle takes you out into May. So you get the idea that this next rally in HYG is likely to fail. And that probably is a good message for the stock market. So I thought looking at HYG, the comparisons, understanding how this works together is just super important for you to see because it points to potentially a serious problem out into the summer for the stock market. Now, my analysis on the big picture points to August as the period where a serious low could be potentially made. This is a little different alignment, so I'm going to have to review how those work together. Now, when the stock market goes down sharply, interest rates go down sharply. Money moves into the shorter term paper, into a place of safety. Money moves out of places of risk. HYG is a place of risk. So generally, when there's big declines in the stock market, there are big declines in interest rates. Now, I'm going to put up the TNX, which was something that somebody requested for me just in the Q&A, and I just kind of saved that for here. Here is where I think the TNX is going to have a big decline, and that is out into summer. The rally right now in TNX that we're getting right on time over here as we get this inflationary panic going on, but that's already pulling back. This is a resistance zone right over here. And when you get into a resistance zone, that's a buy futures zone for the Treasury. So you can see it's getting up here, but this looks to me like a potential failure and lower interest rates out into the summer. And that information is suggestive of the fact that there's going to be some significant slowdown that the market is going to be looking at as we get into the summer. We've seen these bad numbers that came from the employment numbers today. And I think, between the tightening of oil, between these bad numbers, massive indebtedness that we see, not only in the government, but the public, the private sector that is just, overwhelmed with debt and their credit cards. I think there's a big slowdown coming, and I think that's going to move interest rates down. I think it's going to negatively affect the stock market and HYG, and I think HYG is giving us that information right now as it has that important breakdown. It's saying there is risk out into the summer, and it's also saying that were there to be rallies, and there likely will be, that they should be held in suspicion. And we'll talk more about my targets in the market in a moment. Let's switch over now to look at the S&P 500 index, and we're going to switch over to this chart right over here. If I can get that chart to pop. Okay, so now we're going to switch over to the S&P 500 index. And this is the weekly chart. So some significant things that are in here. Look at this amazingly tight range. This is what I talked about. Here are the supports right over here. Here's the 34-week moving average, which it often tests or breaks in the cycles. Here's where the minor cycle low is due. And that's why I thought that the market was going to come down into March. Now, I always said I didn't think that this was going to be the cycle that had a big breakdown in it. It was the first one in this big dominant cycle. And I thought that with the momentum that we saw, that it wouldn't have the big break. For it to turn negative on the longer term, it would need to get under this level at 6522 right over there for it to really turn negative. And we're a long way from that. It'll take quite a panic for that to happen. There's a support right over here at 6622 and one right where it tagged right over here at around 6700. This is running out of time. And this is the time frame when I did my big picture analysis where I thought this next rising phase, and there's two of them right in there, would make the high for the year. And my high for the year was 7150 to 300 and something. That's where I thought it would get up to, and that would be the highs for the year. And I still think that's possible, and this is still a bullish configuration. So without a downside panic, then it's not likely to break important supports. So momentum negative, this will likely turn up in here, but right now it's giving some negative information. But based on everything that we're seeing in here, the huge break we've seen in several different sectors of the market, the war going on, the price of oil, all of that, the bad economic numbers, this is doing amazingly well. I mean, it's really strong. And I can see that, once we get past this and maybe this fighting stops, that the market will get a bid that could get it up to new highs. It makes sense to me. And you can see that's why we continue to have these upward arrows here, because this is still positively configured right there. Now, when I look over at the daily chart here, you can see that we have been talking about this decline into this mid-March period. And you can see that it got down to this support level twice, got down there 4 days ago and then again today. And the odds are pretty good it will try to get down there again. And this is the ideal trough right there, is around the middle of March. It could make its low earlier, or it could make its low a little later and then turn up. And when it does, it will turn up with this weekly cycle right there. And that's where you could get another upside pop. For any significant short side positions, I think it's late. For traders, of course, you can always trade the short side or the long side, just depending on what the situation looks like. Here on the bottom is the option bias indicator. Here's where it told you when the range was moving up and you were continuing to move up to keep your positions long. Right over here is where it went neutral. They're yellow. You can't really see them there. And here's where it turned negative and said, keep your positions biased to the short side. Here's where the slim ribbon PO is giving you these downside resumption signals right there, and that would be a good spot to say, you want to lean to the short side. So this is the potential area it could bounce up to, but I don't think so. I think if it gets there, it's going to be all done with this decline. So this decline looks to me like it is getting near an end. Let me just jump into the VIX, because we're talking about implied volatilities. And you can see in here, let me just get the analysis up right there. So what we have in here is this rising phase. We caught this pretty nicely, expecting to have higher implied volatilities. And as the investors jump for insurance, you can see that you barely got a downtick a couple days and moving up again. This is pointing up into that March period where I think the low is going to be in the stock market for this period. And that's the same thing right over here. And then you're going to get into a period here where implied volatilities drop off, and you get your corrective process right here on the weekly right there. And that will coincide with the corrections that come here on the daily. So I just think we're in the late phases of this intermediate decline right now. And the late phases, as you can see here, in implied volatilities, and then the market potentially getting into a period where it will try to make a new high. Right now, it's in a period of risk. This next week or two, we could see some sharply down move to the downside. We have had a question that was about, that wanted me to comment on what might happen if the buy the dip algos get turned off. Well, the buy the dip algos are just, automatic trading. These are machines that once they see bids come in, they just race them and push the market up, and that's all these short covering waves that we see going on in here. And the only way that's going to won't happen will be if you get a throwaway on the close on one of these days where it's too late in the day for the algos to click in, and they're just going to let the market fall. So that might be the end of this decline when that happens. But this is where we broke the range that we had in here, had this diamond formation on the NASDAQ, got down to this 78.6% warning level right over there. And this is that bigger support, 23,846 right there. So this looks to me just like the S&P 500 does. It's still positively configured, though momentum is negative. And you can see in here, look at these daily arrows right over here, warning you of downside resumptions to come and the market continuing to move down. And here are the red dots in here telling you option bias indicator, keep your positions biased to the short side until the market tells you differently. So this is very much aligned with the S&P 500. And the NASDAQ and the Russell is pretty much of a life of its own. It has different rhythms that we look in here. And this one points out to that June period. So this one, you get this big downturn here, you put it supports, and you're about to get into this rising phase. I don't think it's going to be able to make a new high. Honestly, I think this is a different story. And these extremely expensive Russell stocks are very, very likely to struggle. Remember that the Russell, whatever you see as the PE, 18 or 19 out there is not real. The real PE is somewhere around 58 or 60 if you count the stocks that lose money, the companies that lose money. So it's extremely expensive. And right now the momentum just turned down right over there. So this one might get some rallies in here. And you can see right over here on the daily chart, it's the same thing, negatively configured right there, breaks the support, some support right over here at 2480, 2470, right in there. And I wouldn't be surprised if in the next few days it got down to that level. Then you get into where it makes that important trough, and then you begin to move up again right in there. But I think it will stop in the resistance that will be established once I have the anchor point in here. So negative conditions right here. You could see the option bias indicator was positive all through here and has turned neutral here, but has not given you a red dot yet. That's interesting that it's not telling you to bias on the short side yet. So the Russell, that is the look at that. And that's the look at all of the charts I wanted to show you. Overall, summing it up, we have conditions that are acting exactly as expected. Now, you could say the war kind of made it right for me in the analysis. But then again, if that's true, the indexes would be much lower than they are right now. and they're just not. The U.S. market is just so much stronger than the rest of the world. And though there may be in the next, I'm just going to say 4 to 8 trading sessions, a big downside release where finally they get sold, I think that will be a buying opportunity, and the market's going to be moving up again towards those highs in the coming months after that. Let's take a look at overall market conditions as I switch over to this amazing application, which is our market condition monitor. And right now I'm looking at the intermediate right there. And you can see that what we have in the indexes are really only slightly bearish conditions to neutral for the QQQ in the intermediate pattern. So pretty much in line with what I'm saying, only slightly bearish. It's not all that serious when you look at that. If I switch this over to the short term, then it gets more bearish, that you can see right in here, because the short term is our algorithms in here are showing you that these multiple time frames are setting up in a more bearish way, and that's in line with what I think. Short term, more bearish; intermediate term, not so bearish, based on what I'm seeing right now. If you were a swing trader, over a few days, you'd be using the near term right over here, and you can see that that's very bearish. So for swing traders, it's kept you very much in line. Let's stay on the short term right over here. I'm just going to look at some of the best and worst stocks, and I'll scroll down in here so you can see the stocks that are very bullish there. The wheat market really soared to the upside. And we, had that really nicely set up. Of course, Chevron, Apache, the oil stocks, Phillips 66, those are all benefiting from the higher oil prices. And Target, I'm surprised about that one, but that's living there. T-Mobile, soybeans, of course, as commodities get a bid. And of course, USO, that's the oil market. XOP, oil and gas exploration. Valero, Martin Marietta Materials. So those are all the ones that are very bullish. And let's look at the ones that are very bearish right there. And we'll just look at the top ones right over here. Like I said earlier in the show, we've seen a lot of weakness come into the financials. Wells Fargo is one of them right there. American Express, you can see there. And then you had Qualcomm come out and say that they're cutting a lot of their staff, and that's been very bearish. Hewlett Packard right there. So First Solar, Lululemon, Tractor Supply. Well, I just went there to buy some birdseed. Wendy's, Black & Decker, Disney, those are all very bearish. Lyft, Genuine Parts, IBKR, Wingstop, Nike, those are all very bearish, as you could see. And those stocks have done very poorly. And this really helps you stay on the right side of these individual equities when you use this. Our built-in algorithms really help you with that a lot. That is everything I'm going to show you. The stock market MCM is available for level 3 and level 4 members. So please, if you're not a member and you want to get that application, write to Matt at askSlim.com. He's going to give you a first-time special for our memberships, and he will really be able to help you a lot with that. Again, remember, our day trader special is on right now, and Matt is going to stay here for about 10 or 15 minutes and walk you through some of that. It's free, no credit card, no auto renewal. If you're an active trader during the day, you're going to want to see this, and you're going to be able to get it for free from March 9th to March 20th, and the pre-sign up is on right now. So Matt will tell you absolutely more about that. You can go right up to our website here, free day trader preview right there, and you will be able to sign up for that. Again, no credit card, no renewal. Just take a look. We really want you to see it because we believe in it so much. That's it, team. How did we do?
Good job, everybody.
Great job, all. Excellent presentations.
Good
Good
one.
work,
All right, Matt,
everybody.
you're going to stick around, right?
Yeah, I'm gonna stick around.
All right.
So
Great.
take care.
See you all. Bye.
All right. Thanks,
All right,
guys.
take care.
Bye-bye.
Okay, everybody who's hanging around, like I said, we'll spend about 10, 15 minutes here and we'll take a look at the day trader service. I'm back on the free day trader preview page. Again, you can access that from the homepage of askSlim. You click on the free DayTrader preview. That'll take you to the sign up page. From the sign up page, you can see the little overview, and then you have your form that you can fill out. Once you fill out the form, you will then receive your login information within 24 to 48 hours. And we look to go live with this on Monday. So if you get any questions, feel free to write to me at matt@askSlim.com. All right, so let's jump into it. When you do get your login information, you're going to end up seeing a button that looks like this. An orange one says DayTrader service. When you click on that, that's going to take you into the dashboard for the DayTrader service. And we're going to go over the key areas of the DayTrader service. First, I want to show you our resources, webinars, and video trainings area. And this is extremely comprehensive and very robust. So this is where if you don't start here, you're going to want to finish here to really learn more about what it is that we're providing, how it's unique. And I would recommend that you do come in here and do some review before Monday. And you'll get a good feel for the tools and the insights that you'll be benefiting from with the service. So that's the resources area. Go back over to the dashboard, and let's go look at the impulse monitor. So this is a proprietary algorithm that we built, and this is a standalone tool. So this doesn't require Zoom or any software. This runs throughout the regular market session. It starts at about 8:40. So the algorithm settles in. So at 8:40 it starts, then it finishes at 2:55, that's Central Standard Time. And what it's doing is it's looking at conditions that we have a multiple time frame intraday formula that we've built, and it's trying to diagnose if we have an impulse that is either underway or conditions are ripe for one to form. So you're going to see the different degrees of bullish or bearish conditions. And what's cool is that it goes beyond just the indexes. So when I click on all, it's going to expand out. And if I click on and sort by impulse condition, you'll see that it'll sort based on whether you have the most positive ones and then the most negative of those symbols. Now, this is not a buy-sell indicator. This is, again, meant to tell you, give you a sense of that overall directional bias in terms of an opportunity for an impulse. We always want to look for when is that next leg of a directional move likely underway, or what are those conditions that are suggesting there's a higher probability of that. And that way you don't, again, get run over by when those impulses happen. And more importantly, this is an opportunity then to hold your positions for a longer ride and have an opportunity for those larger profits. So this tool here is going to give you a sense of impulse conditions that are on. And if I click it the other way, you'll see the ones that are currently negative right now. Again, this is not meant to be a buy-sell indicator for a scalper. This is giving you a bigger picture of more of a dominant condition that is either underway or that is developing. All right, so let's go look at our replay system. So with the replay system, what you have here is every 5 minutes, we're taking screenshots of the market. And we're doing this from cockpit number 1, which is live. So I'm going to click on today's session here, and you're going to see our cockpit number 1. This is not a live look at the cockpit. This is the replay system where it's taking screenshots every 5 minutes of the market conditions. And you can scroll forward here, and then you can see how things start to develop. And it's a really helpful strategy review tool, and that's how I would best describe it. So if you are new to the tools that we have, this is a great way to familiarize yourself with them and see how they're acting with regards to the price action. And specifically, what you'll notice here is you got the impulse monitor on the left. There is an 8-minute strategy here that we have in the center, and then the roadmap over here on the right. And so we have the impulse monitor, the 8-minute, and then the roadmap. And the roadmap's really important because that's going to help give you a sense of those key levels. So we have an upside area, and then we have our downside area, and you really get a handle on where those key levels are. This is updated every day before the market opens. So these levels are freshly reviewed by me in the morning pre-market, and then these stay live in terms of the roadmap is available throughout the session through the live cockpit number 1. These are just the screenshots of it. And if I go back out here so that you can see, go back into the replay system here. Just go look at yesterday. As we go through the day here, I'm going to go to the middle of the day. What you'll also notice is on the roadmap, we have our 2 reversal scout indicators. One is structured for picking up shorter duration signals, and then we have what we call so it's slow and the fast, and you can see how these ones play together really nicely. When you have the dominant reversal scout negative and you're in a negative condition and you have a rally attempt and that rally attempt fails within the confines of the larger dominant condition, there's a higher probability of another leg lower. So if I back up here, you can also see that the impulse monitor, when it's telling you that there's an impulse on. So yesterday through most of that session, it was telling us to be careful in terms of downside risk. And you can see the labels up on the top. We have the condition labels, very bearish here on the SPX, very bearish in the rut. And those ones definitely underperformed yesterday. And these were this is very helpful to give you a sense of that directional bias. So that's one of the most important decisions you can make, obviously, is am I going to be long or am I going to be short? And how are you going to make that decision? And that's really what these tools are about, is honing in on that directional bias decision, giving you a sense of what the main move is that is currently underway, and having a really good feel for the price action relative to key levels. So if we keep going here, you'll notice when we get into these support zones, so here's an example of getting into the support zone on the NDX. So if you are a scalper, when you're getting near these key support zones, you're likely to have reactions out of them, at least for a period of time. And sometimes for a scalper, that's all you want, and that's all you need. And then you can hone in on that by looking at the 8-minute. We'll give you a sharper, zoomed in perspective on the price action. Go back out. And we'll keep scrolling here. Just want to give you a feel for how helpful it is to get a feel for that overall directional bias and having the impulse condition. Then also you'll notice that the SMI here on the bottom. So as you really start to get, when you swing from overbought to oversold, it's also a really good tell of, do we have a potential shift coming in terms of the overall trend for the day. So as we got down into that oversold condition, when you're looking at the stronger symbol for the day, so let's say the NASDAQ, which was stronger than the other two, you can be monitoring for a potential bounce to form. So yesterday, that's why we want to know where our levels are. It's so important to have a good sense of where those levels are, to have a sense of when those moves are likely ending, and have the tools that can help pinpoint when things are shifting. So if I go back up and we look at that 8-minute, so the combination of having the levels in front of you, as well as the shorter duration time frame. So as I go over to the 8-minute over here, you can start to see what we call our signal line turn up in the SPY, turned up in the QQQ. And those are tells that if I am short, or if I'm trying to make a decision on my bias, I want to be paying attention to those, because I don't want to be typically going against the momentum condition, especially when you're in a very overbought or very oversold condition. Markets are likely to react pretty quickly, and you can see it started to consolidate in that support zone, and then we got that bounce up. So this is the benefit of the replay system, where you can go back in time, forward in time. You can really get a great feel for how these tools work. You can, again, look at the label here in the NDX, how that one through most of the session yesterday was showing more of a bullish condition, holding up. And then once we got that bounce, it really accelerated on the upside. And you can see here that we were bouncing around between short term, slightly bullish, and then it took off here and got bullish, and that was a nice move back up. So again, whether you're a scalper or you're looking at, the next 15 minutes, half hour, couple hours, these tools will really help you hone in on that. And then the second cockpit is for the futures traders, but it's not just for futures traders, because you have an opportunity to use this really to benefit from additional tools that we have available, and then a even shorter duration time frame as we get into the 3-minute. So this is the ES future, and then we have the NQ future, and there's a number of indicators and tools on here, all with the same goal, and that's to help you do 3 really key things. And that is, number 1, when you try to make a decision on your directional bias, how am I going to do that? So there's tools on here to help you accomplish that. There's tools on here to help you get a feel for, are we in an upside move, or are we in a downside move? Are we in an upside move for a scalping time frame, for a minor time frame, or for more of the major time frame? So we look at the 15-minute, let's call that our major time frame. Then we have the 8 minutes, our minor time frame, and then we have our 3-minute that really helps with our scalper time frame. And we also include a trader radar here that helps with getting a feel for the rhythms in terms of the buying pressure and the selling pressure. And there's resources really for all this. But when you can see the selling pressure starts to wane, so you'll have the waves when there's selling pressure, there's a contraction in the trader radar, and then there starts to become a settling in, and you have choppiness, and really there's not much happening. And then you'll start to see it turn gray. And then when you combine it with the other tools here, so you got the reversal scout indicator that started to turn green. You have the SMI that starts to turn up. That gives you a good indication that that move is likely over. And once the SMI crosses, the fast crosses above the slow, especially in the minor here, if you are that swing trader looking at the next 10, 15 minutes to half hour, these are when your swings are starting to happen. And then we have exponential moving averages on here and other indicators to help get a feel for those key levels. And when you get a nice move starting, you want to watch as you get up back towards that oversold condition on the SMI. That's when things can start to shift again. So you can see this play out beautifully as it cycles between a low that forms. Trader radar helps us get a sense of the waning selling pressure. The reversal scout turns up, SMI turns up, and then we rally. I like to call this the line in the sand. A lot of times this is going to draw the price action, and then it starts to get real choppy around there. And typically you'll start to break out either above or below it. And you can see how on the 15 minutes really hugging that, and as it's struggling to break out right now above it. But this was a nice trade right here, really played out well. If in terms of the tactical application of these tools. And then you can see how the trader radar starts to warn you as things shift as well. So there's a lot of tools here to give you the warnings around changing conditions as it goes from green to yellow. And then we have the SMI, which is a very sensitive indicator, rolls over. Then you have the reversal scout, rolls over. So if you're a scalper, there's opportunities that present themselves pretty quickly, especially in that 3-minute, as that reversal scout goes negative, and you get a nice swing from near that overbought and then back down to the SMI being oversold. And you can play those swings with these tools, again, giving you a really deep dive perspective into the market mechanics of price action, of momentum. And from here, you can really effectively put your trading plan together. So if there's some questions out there in the audience, I'd love to hear it. If not, we'll catch up again early next week, and I'll show you again where you can find all of the tools that you're going to have access to. Here's our DayTrader resources, where the webinars, video trainings live. There is a trade planning video that I put together from technical evidence to trade planning execution. You get the foundations of trade planning. There's a companion video that goes with it. I mean, there's really a treasure trove of information that is going to be available to you. And it's going to take you a little bit of time to get acclimated. But once you do, it will be an awesome experience to really get a feel for how these tools can help you with your decision-making process. Because when you simplify that decision-making process into how do I know that do I want to be long? Do I want to be short? Because this is about being a directional trader. These are designed for directional traders, understanding the time frame that I'm trading. So if we take a look at, let's look at the NQs here. If I'm a scalper, I'm really starting in that 3 minute because I want to understand what's happening in this 3 minute, and then I want to understand it relative to the larger time frames. And the reason is that if I get my 3 minute wrong, then there is a high probability that as a scalper you're going to get slammed by the market in terms of the momentum, the price action, because you can really get a granular view of the price action at that 3 minute. And what I use is the SMI and Trade Radar to give me a sense of what kind of move is underway. Are we starting a new move to the upside? Are we starting a new move to the downside? That's really a key question you have to ask yourself. And then if we are in a move to the upside or a move to the downside, what is the maturity of that move? So if you look at the SMI here and you look at Trade Radar, you can see that this move started to conclude. Okay, and then you have the SMI that's showing its first cross here at 11, let's call it 1145-ish, crosses up, and then you have a confirmation of that transition with the signal line from the reversal scout. And then it's hugging around this gold dash line, which I call it the line in the sand. So just talking through how you might look at this opportunity, I'm someone who looks at building into a position, starting a position, then adding to the position. Maybe it's a total of a 3 lot or something like that. So in this case here, you have the price action. You have the SMI cross, and then you also have a big bull candle. You get up against the line in the sand, and then you get you pierce up your head above it. All the while here, the SMI staying above, the fast is above the slow, and you have a nice breakout move. Now, how do I make decisions around the exit? Well, using these tools, you'll see we have a linear regression channels that are built into here. And what will happen is that many times you'll have a nice move that gets up to one of the channels, and then you either start to slow, consolidate, or reverse. So that's exactly what happened here. We got up to one of the resistance levels of the linear regression channel. Also, if I move over from right to left over to my 15-minute, you can see that line in the sand again. So these are exit opportunities, especially if you're a scalper. If you're not looking for that 30 to 60 to 90-minute, 2-hour move, and you're only looking at the next 3 to 15 minutes, that's what you want to be paying attention to. So as we get up to the oversold level in the 3-minute, you can see how it backed off as soon as we got up there, started to roll over. And also what I want to do, though, is how you use those longer duration time frames that can be helpful. So in the 8-minute, if I pinpoint here my cursor, you can see here that this was a higher low that started to form. So that's really important information. That's why this 8-minute here is what I consider to be like your dashboard, your windshield if you're driving, and you have your left mirror is giving you the bigger picture perspective. You have your windshield, and then you really have your right mirror is giving you that X-ray vision on the price action. And so there was a couple other tells that would have suggested to me that this would have been a nice upside scalp opportunity, given the fact that this is a higher low that started to form. And then also, if I go over to the 15-minute, the signal line reversal scout here was still positive. So I really don't want to be fighting the reversal scout in the major. So this is the major. And when the reversal scout's negative, I pretty much want to stay away from long side opportunities. Maybe there's a small scalp, but when you're against the dominant momentum or dominant trend, there's obviously a lot more risk being counter unless you see that there is some low evidence of structure that is starting to form. So there's some good evidence of structure here that started to form. So that's why this scalp made sense. So that's how I look at that setup. But there's just great information And we try to have these labels here to give you an idea of what are the current conditions for the time frame you're looking at, and very supportive to that decision-making process. All right, if there isn't any questions, I'm going to wrap it up here. Oh, there's a couple here. So the arrows in the SMI indication of a touch of the high and low. The arrows are I think you're talking about these arrows. This is when there is a move into the either oversold or overbought, and then we exit from that. So you come into the oversold, and then there's an exit out of the oversold condition. That's what those arrows are. So you actually have to get into the oversold or into the overbought for those to happen, and that's what those arrows mean, Danny. So you can see that happening here, and then over here on the SMI, and you can see that here on the 15-minute. So it's not necessarily a touch of high and low. It's actually when you breach the oversold or you breach the overbought. So once you get under the oversold and then you come back above it, and that's, again, really important. Try to understand, are you in a new upside move or am I in a downside move? And if I'm in an upside move, what is the maturity of it? And you can use these tools to really help with that. It's no different when you're trading as a swing trader, looking at a few days, few weeks, few months. It's the same concepts, but this is a much faster paced decision-making process that you're going to have to put yourself through when you decide to be a day trader, especially if you're going to be a scalper. Your decisions are going to, you want to know what your decision-making process is in advance, know what you're looking at, and know when you're going to be executing. So that's super important. Let's see what else we had here. You're welcome, Danny. Yeah. Okay. So I think that might wrap up all the questions that I see right now. Again, I'll be going live next week, starting on Tuesday. Probably do it Tuesday and Thursday of next week. But when you get your information, make sure you jump into those that resource area and really dig into it. It's worth the investment of time to understand how to structure yourself. I can't stress it enough that if you choose to be a day trader, you need to be prepared. It is like, imagine you're a Formula One race car driver. The kinds of decisions you have to make are very intense in the moment. And so they become less intense if you have a plan. And the plan is understanding what your approach is going to be. So I will be there Tuesday and Thursday, answer questions of current members and anyone in the preview. Otherwise, wish you the best. Have a great weekend and great trading.